If there's one thing that Eastern and Western observers agreed on before the outbreak of the Ukrainian war, it was that if war came, it was likely to be a fast one. The application of overwhelming active deployed military might by the Russian Federation would quickly threaten the capital of Ukraine, force political and military concessions, and potentially destroy the Ukrainian army in the field in the east of the country. In that kind of war, what mattered was Russia's tank divisions, its airborne forces, its active deployed military units versus what sort of resistance Ukraine could raise in return. However, once a war starts to go longer than a matter of days or weeks, once it stretches into months or even potentially years, war ceases to be a purely tactical and operational exercise. It ceases to be purely a matter for the militaries themselves, and it becomes a fundamentally economic problem. And what I want to look at today is the first in a two-part series examining what happens if this war goes long, and in particular, looking at some of the challenges that both the West and Russia are going to face in a conflict that extends. So a quick point first on where we are now. I hope that all viewers sincerely wished that this war would end tomorrow. Every day that it continues causes more damage to civilian infrastructure, more lives to be lost, more individuals to lose family members, friends, colleagues, more lives to be damaged and destroyed. However, with the victory of the Ukrainian forces on the defensive on the Kyiv front, it does seem as if we're now in potentially for a war which may go on for months or even years. And as for where this war goes next, stop me if you've heard this one in the comments or on the news channels recently. The new scheme on how Russia's going to ultimately win this war. The idea here is that Russia was never after Kiev, it was never after subjugating Ukraine. What it's actually after is the oil and gas resources of the Donbass, which, with every time this theory is raised up, those reserves seem to increase in value. Russia will then secure its land link between its existing eastern territories and Crimea, presumably by finally capturing Mariupol and linking their territory all the way down south. They'll secure the water supply for Crimea. At some point, they will take Mykolaiv, they'll move towards Odessa, and in doing so, they will economically neuter Ukraine. They will secure Ukraine's entire seaboard territory, deny it a port, and at this point, presumably the war is over, Russia is able to develop these new reserves, they've stopped Ukraine establishing itself as an energy competitor, they'll resume the export of hydrocarbons to Europe, and Russia profits. Fantastic, a flawless military strategy, I might hear you say. Except, and just hear me out here, there's one potential problem with this plan, beyond just the military challenge of accomplish it in the first instance, which I don't think is a certain thing either way. And it's a minor problem, but just hear me out. What if Ukraine says no? What if Russia manages to capture the Donbass, break through, and even take Odessa? What if they manage to secure all of that territory? They put forward a peace plan which says Ukraine acknowledges and recognizes the People's Republics, Russia's annexation of Crimea, they accept Russian domination over Odessa, and Ukraine simply says, no, we're going to keep fighting. Because here's the problem, wars only end really by mutual consent. You continue ratcheting up the pain until the pain is greater than your opponent's will can bear. And in abandoning Kiev and pretensions of total victory, that basically means that Russia has lost its opportunity, unless it recommits to something like that, to really knock the Ukrainians out. Now it's going to be a matter of a peace deal. And I have a question over whether Ukraine would ever accept such significant dismemberment. I also question whether or not the West would like to reward Vladimir Putin for launching this war. Because surely allowing him to accomplish such sweeping strategic objectives when they have the capacity to continue the conflict would just be an open invitation to any other potentially disruptive power that might want to launch offensives in order to gain similar advantage. Now, I can't predict the future. I don't know what's going to happen with the offensives in the Donbass. I have my ideas, but those would be mere speculation because I'm using very, very limited information. But I do have enough information to conclude the very basic fact that this war doesn't end just because Russia accomplishes its military objectives. So it's worth talking about the long game. What happens if this war does end up going further? Today I'm going to talk about the economics, the financial, so how is the Russian economy faring, how's the Ukrainian economic faring, and what does the economic battlefield between the two look like? And secondly, the issue of arms supply. That'll be the next presentation when we go back to defense economics and what can the military industrial complexes and logisticians on both sides furnish in order to keep both sides in the fight. So what am I going to cover specifically? I'm going to look at the economic balance between NATO and Russia. I'm going to look at the Russian economy since the war broke out, Ukrainian challenges. I'm going to then examine the long-term economic picture, and we're going to talk about some options for the Russians in the West. Finally, the boring stuff, channel updates, Caveats as always, the data here is imperfect. Often the data is unmatched. GDP figures always come with asterisks. So acknowledge that there are going to be limitations here. I'll call them out where I can. The second thing is, and I have to say this because I'm an Australian, guys, this isn't financial advice. Please don't go buying or dumping Russian bonds or something because of something someone on the internet says in a presentation like this, okay? This is not financial advice. I am not a financial advisor. So please don't bet the house on Russian bonds or shares or something. Right, let's get into it. What am I not going to be covering? Almost as important as what I am going to be covering. Here's your TLDR. Here's the not covering. Not covering the military industry. That's next episode. I'm not covering what China could potentially do to alter the conflict. Really, that's both A, mere speculation, and B, it's a completely different analysis case. Like, you've changed the scenario fundamentally if Russia is involved. I'm not covering the outcome of the offensive or even the probability of the long war. I'm just going to explore what happens if you move into one. The TLDR, because people have asked for one. West rich, Russia not rich, but Russia has some great tools to patch things together in the short term. So as usual, the cheerleaders on both sides are probably wrong. The cheerleaders in the West who reckon that sanctions is going to grind the Russian war economy to a halt tomorrow are dreaming. And the people on the Russian side who are saying that the Russian economy is fine, the ruble is fine, everything is okay, and that they can outlast Ukraine are also probably wrong. I have an open question over how willing the West is to ramp up its support. If it is willing to ramp its support up sufficiently, it's probably going to win. Because if the answer is the West is willing to absorb at least a little bit of pain, its ability to inflict pain on Russia is completely asymmetric. For every hit the West takes, it probably has the capacity to deal 4, 5, 6, 7, 10 to Russia in return. So really, this is a question of Western will. This is not a closed system war. And here's the important point right off the bat before we start talking about Russia or the NATO or anything. This is not a closed system conflict. And before I continue, this map is a good opportunity for me to make one caveat over this entire presentation. I'm going to talk a lot in this presentation about the economic strength and preponderance of the West. I need to make clear I'm talking about that in the context of a confrontation with Russia. The world is far more economically multipolar than it has been in a very long time, and there are some huge emerging and very powerful economies out there, obviously. You have the Indias, you have the Chinas, you have the Brazils, the Indonesias, the various emerging powers across the world. So when I talk about Western economic preponderance today, just keep in mind that I am talking about it in the context of a confrontation with Russia, not in terms of the economies of the globe as a whole. It's not quite as open as this map suggests, because a lot of these nations highlighted in blue have only sent humanitarian aid and usually in quite nominal amounts. But the reality is that Ukraine has a significant number of countries and a lot of economic heft backing it in its conflict with the Russian behemoth. And that's at the core of what the long war looks like. Not a straight comparison of the Russian and Ukrainian economies, but an examination of the economic context that all the combatants find themselves in, now that the West has decided to a greater or lesser extent, mobilize some of its economic strength in order to achieve a geopolitical outcome. But let's start with the Russian response. Because if you listen to the Russian cheerleaders, and this is the bit where I get in trouble with them, they're going to tell me first and foremost that the Russian economy is fine. I'll concede one point to them. Anyone that expects the Russian war economy to collapse tomorrow is wrong. I'm usually very guarded with my statements, but the reality is that Russia has been building itself up to this for a very long time. They built up a massive stockpile of foreign exchange before this conflict. They spent the last 8 years trying to move their defense sector away from reliance on foreign components. Some of it's still there, but the goal of moving away from Ukrainian and foreign components is very, very real. While their planning hasn't stretched to all of the sanctions that have been put in place, I think they have been taken off guard. The reality is Russia has prepared for this and has some capacity to endure them for a period of time. In some ways, the Russian economy looks like it's defied expectations. Shares are in decent shape on the Russian market. They've lost, but not hugely. The Russian currency has bounced back largely to where it was before the crisis started. The Russian trade deficit, or should I say trade surplus, has actually widened. And people point to this and say, hey guys, look, sanctions aren't working. But really, you need to take a look below the surface to see whether or not the economy is actually fine. And that's where the cracks start to appear. And the recovery of the ruble is just one example. And it's a great way to illustrate this because it's something that people point to say that the sanctions aren't working and the Russian economy is fine. So straight after the invasion happened, the Russian ruble fell through the floor. You could buy 130 plus rubles. At one point, it was 150 rubles for a US dollar. That's unheard of. It's recovered to the point where it's about 80 at the time of recording. The problem with that is It looks like on the surface the ruble is doing fine. If it's back to that sort of 80 territory, it's reversed all of those losses that you saw. The issue is that there's a whole bunch of interventions the Russian government has made in order to make the ruble look fine. So here's my step-to-step guide on how you save the ruble, essentially, if you're Vladimir Putin, or how they have saved the ruble. And the analogy here was, it's like any other product. Supply-demand drives the pricing. Buy pressure is compared to sell pressure, and that pushes the price up and down. If lots of people want to buy the ruble and not many people want to sell the ruble, the price of the ruble will go up, vice versa. So straight after the conflict, everyone wants to get out of the ruble because suddenly Russia is an economic pariah and people want to bail out of the ruble. The job of the Russians is to start saving it. Well, the first trick in order to save the ruble is basically you act like a politician who's published a really shitty book, but you want to have great publication figures, and that's that you go out and you buy it yourself. The Russian central bank saved all that foreign exchange before this crisis started, and one of the reasons it saved it is so that once the crisis started, it could start taking those US dollars and euros and foreign currencies and using them to buy rubles, pushing up demand for the currency, pushing up that buy pressure. Now, that obviously costs the government something because it's buying a weaker currency, the ruble, or a currency that should be weak but for the pressure that they're putting on it. They're using valuable currencies like dollars and euros to buy it and press it up. So there's a cost to government in doing that, but it does push the price up. The second thing they did was they bribed people not to sell it. Lots of rubles are in the hands of private individuals and companies and whatnot. And one of the great ways they bribe people to not sell the ruble is they jacked interest rates up to like 20% on the official rate. It's now back to 17%. But think about that for a moment. Most Western nations, you're used to getting a reward of a low single-digit percentage for keeping your money in the bank. Now suddenly you're getting 17% for keeping your rubles in a Russian bank. And you need to have rubles in order to access that interest rate realistically. So you're basically using greed to convince people not to bail out. They might think that the ruble is about to collapse, but you're tapping into the greed of that 17% interest rate to convince them that maybe they should just keep their money in the bank. But let's just say that doesn't work. Let's just say you still have a shitty product and you can't convince people to buy it. Well, one thing you can do instead of making a better product is you can physically force people to buy it, whether they want to or not. And Russia did that. Exporters who earn US dollars or euros or whatnot, so they sell their goods overseas and those people pay in foreign currencies. They get them in their bank accounts. Have to convert. They're required to convert 80% of those foreign currencies into rubles. And what is that? Well, that's purchasing rubles. It's taking foreign currency, it's buying rubles. So they're basically forcing private companies or other exporters that may or may not be partially government owned to take the things that they want to hold, like euros and dollars, and turn them into rubles whether they want to or not, pushing up that buy pressure and supporting the ruble. The next thing is that you then ban people from selling it. If you can't get enough pressure to get it to where you want to by itself, just ban people from selling the ruble because then the sell pressure is reduced. This was achieved through things like massive commission fees. If you were a Russian citizen and you want to buy foreign currencies, for a while there you were paying like 13% commission, a 13% tax, essentially, a friction on turning your rubles into foreign currencies. They put limits on how much foreign currency people can buy. They put a limit on how much foreign currency people can take out of the country or pull out of their banks in order to stop a rush on the banks. You're suppressing the ability of individuals to sell rubles at the same time as you're artificially driving up demand. And then finally, you make it hard for people to de facto sell their rubles via imports. What do I mean here? Well, when you buy imports, that adjusts the trade deficit. And the inflow of foreign currency into Russia is produced by the fact that they sell a bunch of oil and gas, which generates a whole bunch of exports. But now people can't import as freely. And that's been achieved in a number of ways. The biggest thing has actually been things the Russians haven't done themselves, like restrictions on major shipping companies moving into Russia, the fact that international corporations are pulling out of Russia, the fact that people are not underwriting letters of credit for shipments into Russia, that businesses don't want to be engaged in shipping to Russia at all, and that's cratering Russian imports. And by doing that, you're essentially adjusting the trade balance in Russia's favor, which again helps hold up the ruble. You get a whole bunch of US dollars in on net, use that to buy the ruble, profit. So congratulations, you've saved the ruble. But you've done it by spending your foreign currency to prop your currency up and then basically using a bunch of coercive measures to de facto rob your citizens and companies in order to hold up your currency. Congratulations. The ruble isn't recovered. The ruble is a zombie being held up by a variety of bizarre market interventions. And there's a similar situation on the stock market, to be frank. Russia seems to be operating under like a Wall Street bets logic sort of situation where they can claim it's not really a loss unless you actually sell your shares. Russian equity, so Russian shares, got absolutely slaughtered whenever they were traded on foreign exchanges. But not in Russia. Well, why? Well, the first thing Russia did was they closed the stock exchange, so you couldn't buy and sell them, which was a great way of stopping the market from crashing when the market's not allowed to really move. And when they did reopen it, they reopened it only for some shares. And here's the kicker. They prevented foreign holders of shares from selling. So if a bunch of people want to bail out of their stock positions, that would create the stock market because you got a whole bunch of sell pressure. Well, if you just ban selling, then there's no sell pressure. Essentially, this is robbery. This is poleaxing your foreign holders, because what you're basically saying is their asset is a lot less worthwhile than it was before because of the artificial restrictions you put on it. Tell me, how valuable is a bank deposit that you are not allowed to access? It's less valuable than one that you can pull out whenever you want. Well, now individuals are left holding Russian shares that they can't sell. They can't turn them into cash. They can't operate in Russia because of sanctions. They've essentially had their positions wiped out by these restrictions. So the Russian stock market itself, it's doing okay. But only because no one's bloody allowed to sell their shares. It's a zombie. In other words, a lot of people are getting screwed here. There's what the ruble is trading for, so what it's worth in inverted commas, and what it's trading for if you actually just try and go out there and get money on the street. The de facto black market exchange rate, for example. And then a lot of people in Russia are getting screwed by these rulings. If you're an exporter, you got screwed. You have to give 80% of your foreign currency over and convert it into rubles. If you're a defense company, you're getting screwed, and I'll cover why in the next episode. If you're an ordinary Russian, you're getting screwed. You're dealing with massive sky-high interest rates. You're paying massive commissions if you want to convert any of your currency into foreign currency. You can't pull your foreign currency out, and you're paying an absolute premium in inflation at the time of really slow wage growth. So think about it. The price of servicing your debts is going through the roof. The price of what you buy in the shops is going through the roof. Your wages aren't going anywhere. It's the ordinary Russian that's paying the price. Basically, the Russian government has put in place a whole bunch of structures that make sure that it's not it's companies, it's exporters, it's the public at large. They're going to distribute and pay the price of these sanctions in order to hold things like the ruble and the stock market together. So the question then becomes, how long can they keep at it? Because this is vital in a long war scenario. How long can Russia keep these stimulus and distortionary measures going? Russian strategy going into this hinged on this 600 plus billion reserve of foreign exchange that they had. A significant fraction of that then got frozen immediately when the war broke out. The stuff that they were holding in American banks or European banks, that got frozen. They can't access it, but they still have access to hundreds of billions of dollars in Forex. Russia is now reporting again declines in those reserves. So even with all the oil and gas that they're shipping, that net reserve of foreign exchange has dipped from something like 644 bill before the war to about 604 at the time that I produced this. Roughly speaking, a rule of thumb would be about $1 billion a day. It's slower in terms of recent declines. It was most rapid at the start, but they're going to have to continue bleeding these foreign exchange reserves in order to maintain critical imports and support the currency. Even the trade balance is also an issue. So yes, Russia's trade surplus has surged. They're selling a lot of oil and gas and other products still. They're not importing anywhere near as much. The problem is a lot of those imports are not like, it's not all McDonald's patties and Chanel makeup. A lot of it is critical imports to power their industry. It's Western parts to maintain aircraft. It's Western software and services in order to maintain the operation of their business infrastructure. It's critical imports to the car industry, to the aircraft industry, the manufacturing sector. And with those imports going down, eventually that's going to translate into major losses of productivity. There's also a big brain drain going on, educated Russians leaving the country in very large numbers. And that's basically a form of capital outflow. Your people are an asset. So I'm not as negative as some observers. I believe that Russia can leverage, in the short and medium term, its trade surplus in order to try and hold up its economy, and there's a long way to go to run them out of their Forex reserves. There's a lot of ways for them to hold up and stabilize things in the short and medium term. But it can't go on forever. And at the same time, I'd say that there's a lot of costs associated with what they're doing now in terms of these market restrictions that destroy the trust of the market, that destroy the investability of your country, that bring about costs that Russia is only going to feel later on when it comes time to recapitalize and try and invite foreign investment back in. And there's more reasons to think that this isn't really okay. It's not even just temporarily okay. Inflation in Russia is very, very high. It's high everywhere, but it's driving at double-digit percentages in Russia. And the problem is, well, inflation is normally driven by a hyperactive economy. You have too much economic activity, therefore you need to slow it down in order to bring your inflation back into line. You'd usually do that through interest rates. Russia's economy's inflation is being driven by a massive increase in the cost of imports, a collapse in productivity as a result of an inability to bring in certain goods, and a general market panic. The Russian economy is not inflating because it's doing super well. It's inflating because it's in trauma. It's doing badly. And interest rates are already sky high, and those are not bringing inflation under control. So there's a risk here of stagflation, an economy that is inflating, but is at the same time shrinking, which is really where you don't want to be, because that's how quality of life gets destroyed really, really quickly. And if you layer on top of all this, what will be required for the Russian economy to transition over to a war footing, if they choose to transition to a war footing, where they start to remove support for civilian sectors, or they start to increase taxes in order to ramp up military production and engagement? What if they call a bunch of workers away to function as reservists? Those would be extra demands placed over the top of this, which would further strain the economy in the medium term. So my summary is basically this. The Russian economy is not about to fall over, but it's certainly under immense pressure. The stock market might look okay, the ruble might look okay, but in terms of productivity, in terms of inflation, in terms of GDP projections, in terms of all of the measures that really go to the ability of a nation to carry on an extended war which is economically draining, the Russian economy isn't actually in great shape. It's showing signs of deep trauma, and there are open wounds that will take time to become apparent. Your sanctions are not going to stop the tanks rolling into the Donbass, but they're certainly wounding Russia, or at least that's what the economic indicators say. So let's broaden this out. We've talked about Russia. Let's now talk about NATO, the West, and the countries that are involved in supporting Ukraine in this side of the crisis, and what the overall economic challenge looks like. In economic terms, Russia is not particularly impressive. In nominal GDP terms, Canada is bigger than Russia. The UK is twice as large, well, almost twice as large as Russia. The US is about 14 Russias. In total, NATO has about 2 USA's equivalent in terms of nominal GDP. So you get that lovely graph on the right. Now, I've also added to that graph certain non-NATO, but NATO-friendly, NATO-aligned nations, nations that have sent support to Ukraine and are likely to send more. And just as an illustration, I've included just Japan, the Republic of Korea, and Australia as potentially NATO-aligned countries to show that this picture is even more brutal when you look at the relative measures. Now, I acknowledge that if you switch from nominal GDP, so how much nominal US dollar GDP you have, to purchasing power parity GDP, so how much can your money buy in terms of a bucket of goods in a country, Russia does jump to about $4 trillion. Whoopee. The fact is, this is a massive economic overmatch, and I'm going to illustrate just how problematic this is. NATO economic capacity is not just about its size, it's about how easy it is to mobilize. How much fat do you have in your budget? Consider this as a concept for a moment. Let's just say you had a huge agrarian nation, a huge subsistence agrarian nation with 1 trillion inhabitants. You could have the largest GDP in the world, but that entire GDP would be occupied just on the task of keeping your people alive. Just basic agricultural production, some housing, the absolute basics. You wouldn't be able to turn that economic capacity into a large army or foreign aid to another countries. There's no fat in your budget. The difference with being more developed and wealthier nations, which most of the NATO nations fall into that category, is that they have fat in their economic capacity that they can direct to things like this conflict. Many of the nations in NATO, they fall short of the 2% spending goal in defense, which is considered a bare minimum. They've signed up to it, they don't hit that level. If you just take those nations and increase those budgets to 2%, and I'm basing this on NATO's own disclosed spending figures, by the way, that earns you about 84 billion extra dollars, mostly from Germany and Canada. Now, that's not a bad start, considering A, that's more than the Russian defense budget, and B, Ukraine's entire annual budget for the government is something like $48 billion. That's a nice start. And there's some signs that this economic mobilization is happening to a degree already. We've seen payments made by countries like the UK to Ukraine, not just to provide for weapons shipments, but critical goods. We've seen fuel shipments. We've seen money paid in order to allow Ukraine to pay the salaries of soldiers and policemen. We've seen underwriting of Ukrainian debt issues in order to allow the government to function. So signs of an economic mobilization wherein the West essentially connects itself to Ukraine and becomes a financial umbilical cord that keeps it going. I'm going to acknowledge here that there are some signs of caution and conservatism on the Western side. We do see signs of individual countries wavering, but some are certainly showing signs of going further and further in. The United States and Poland are classic examples. And let's look at what this might mean if you took this a little bit further. Because when I say 2% of GDP, I'm talking about people hitting the bare minimum peacetime expenditure. Let's just say that the Western countries regard this as a little bit more important, considering it's one of their primary near-peer rivals, trying to basically rewrite the rules of the world by force, by conquering a nation that is on NATO's border in Europe. In terms of a baseline for spending on major conflicts, during the Vietnam War, 1967, the US was spending about 9.5% of its GDP on defense. During the 1980s, so peacetime, Ronald Reagan ramped up defense spending to about 6% GDP on defense. That's meant to be your bare minimum peacetime, peace dividend spending level. During the Vietnam War, 1967, the US was spending about 9.5% of GDP on defense. During Reagan's defense build-up in the 1980s, so again, peacetime, just peacetime but muscling the Soviets a bit. They were spending about 6% of GDP for several years on defense. So let's assume for a moment that this conflict in Ukraine is at least as important as the Reagan peacetime build-up against the Soviet Union. If you apply a 6% GDP measure to the NATO economies, you end up with a budget per annum extra over the top of what they already spend of $1.491 trillion. $1.491 trillion. Now, it's important to remember that at that point, if Russia wants to match you, they're spending more than 100% of GDP on the war effort. That's theoretically and practically impossible. That's the point at which a nation, there is no economic activity in that country that is not directly related to defense and the war effort. At that point, your toddlers literally wake up in the morning, they eat dirt for breakfast, and they begin hand-loading shells with reloads and sending them to the front. That's basically where you're at 100% of GDP on defense. No nation can get to that point. For context, the Afghanistan war cost the United States about $2 trillion US. So when it's a very large amount of money, it'd be crushing for Russia if that was the war chest that was allocated. But it's also not impossibly expensive for the Western powers. Now, I accept that it's not that simple. You can't just suddenly ramp your GDP on defense expenditure up to these levels. But my point is to illustrate that this is not a fair contest. In order to, just by stretching to what is a peacetime mobilization level by historical standards, NATO extends Russia so far beyond the bounds of what it is capable of doing, of what it is capable of realizing, that eventually it's going to outmuscle it in an economic contest. And it's actually worse than that when you start looking at the health of the underlying economies, not just their size. There's a lot of ways to look at the health of the economy and how much it has to give in a crisis, how much you can safely pull out of it, extract from it in order to fuel something like a war effort. So let's look at a couple of measures. Official interest rates in Russia, 17%. America, it's close to 0.25%. The 15-year yield on Russian government bonds, Russian government debt, is about 11% right now. 11% is what they're borrowing at 15 years if you go off the price of their bonds. By contrast, the American government for a long time was borrowing at sub 1%, and an ordinary American can borrow on a home loan fixed for 15 years for about 4%, I think. So congratulations, Americans, Australians, Canadians, and most Europeans. You are more creditworthy than the Russian government. The Russian government has in fact gone into selective default on some of its debt already, i.e. what's happening is it owes money to foreign creditors in dollars or euros. It's rocking up with rubles saying, can we pay in these? The people point to their contract and say, no, pay us in dollars. And they say, get bent. And as a result, that's a selective default. You're not meeting your obligations to pay back your debt. The yield curve on Russian bonds is actually inverted. What does that mean? It means it is more expensive to borrow short-term than long-term, which is insane. That's not the sign of an ordinary healthy economy, at least under regular circumstances. Then there's inflation. Inflation is already running at something like 17%. In Russia, it's likely to get worse. In America, it's at 8%. But here's the thing here. You control inflation, or one of the ways you control inflation is by ramping up your interest rates. America has a lot of arrows left in that quiver. Like, America has a lot of interest rate rises it can do safely and still be at regular levels. Russia's already at 17% interest, and inflation is not under control. Then there's GDP, the size of the economy. Goldman Sachs is projecting Russia's going to shrink by about 10% next year. America's going to grow by about 3.5%. I'll put the sources for those figures in the description, but most estimates fall around that level. That means, all else being equal, the gap in GDP between the US and Russia just over that year is going to widen by an amount that is equal to the total size of the Polish and Ukrainian economies in nominal terms. It's basically adding an extra Poland and Ukraine to the western side of the equation in terms of overall economic strength. And there's more I could go into. The population growth rates are completely different. Russia is reducing in size. America will continue to be a growing nation. Government debt is one redeeming feature of the Russian economy. Government debt in Russia is actually relatively low. So you'd think that they could borrow more money in order to fund the war, but the problem is you can't borrow readily at the moment. The costs of that borrowing are extremely high. Most foreigners won't even deal with you. It's hard to get debt written for Russia at the moment, and if they do buy it, it's at a really high interest rate that'll cripple their economy in the medium to long term. And this gets even worse, I'm sorry, but the numbers don't lie here. It's not bias, it's just reality. The world is dominated by the rich Western democratic countries, and the only other country that's sort of on tier and peer with them is China, and Russia is not China. The UK, Germany, France, all of them have sub 1% official interest rates. So if they need to control their inflation, they've got a long way to go in terms of ramping up those interest rates. Poland has a very respectable 4.5%, higher than the others, but certainly not 17%. All have lower current inflation than the Russian government, all have positive, not negative GDP growth projections. Poland's growth projection is 5.2%. Extremely respectable compared to the 10% contraction that you're projecting for the Russian economy. So life in the NATO countries, in the EU, in the United States and whatnot, it isn't great. These countries have economic problems. They have social problems. They have issues with cost of living. They have issues servicing their government programs. But there's a completely different scale to the economic challenges that the West face compared to those that the Russians now face in maintaining a long war. And this leads into a point on financial mobilization. And I touched on this before, it's not just about how big your economy is, it's about how you can leverage that economic heft to fund or conduct a war. Russian bonds are junk. The central bank is sanctioned. It's hard for Russia to take its underlying economic strength, mobilize that, and convert that into the economic heft it needs to continue to sustain a war. Other countries dealing with Russia fear secondary sanctions. That is, if they evade American sanctions, America will sanction them. And given the choice between engaging with the Russian market and the combined EU-American market, most countries will choose the far larger markets to be engaged with every single time. Russia also is preoccupied with just holding up the basic functions of its economy. It needs to hold up the ruble through those sort of forced expenditures and repurchase. It needs to hold up the stock market. It needs to support importers so that critical goods keep going into the hands of Russians. Before long, it's probably going to have a plan for all the Russians who lose their jobs because foreign companies pull out, because they probably won't keep paying the salaries of their workers forever. Russia has to focus on protecting its economy from sanctions. The Western world, by contrast, is mostly just focused on supporting Ukraine. They have to prepare to wean themselves off Russian hydrocarbons, but they're nowhere near as pressured because they continue to be engaged with the global economy. Export earnings are Russia's big salvation here. The exports of hydrocarbons and whatnot, the hard foreign currencies, are their prop, but they need to be doing an awful lot with that prop. They can't just buy new tanks. Now, what about Ukraine? Because I notice I've focused very heavily on the Western powers at the moment. And there's no avoiding that Ukraine is going to be in really hard economic shape. That's natural for a country that has a war being fought on its territory. Ukraine has already lost or will lose about 10% of its population. It's probably going to lose about 45% of its GDP. That's traumatic. At the same time, it's going to have an immense increase in wartime expenditure. Individuals get pulled away from their civilian jobs and fight. Huge expenditures on weapons imports and whatnot. The nation is, frankly, on economic life support. But my point is basically that that's okay. Because if a problem can be solved by money or foreign support, then money and foreign support can be available. If the West is willing to provide the aid, the capacity of the West to provide that aid is functionally unlimited for the purpose of this conflict. In fact, I'd go so far as to say that in all likelihood, logistics, not dollars, is going to be the limiting factor. Your ability to get material into Ukraine is going to be more important than your ability to find dollars to fund Ukraine. And nations have proven it's possible to operate under wartime conditions. You can run logistics during really adverse military circumstances. At times, the Soviet Union was able to resupply Leningrad during its siege by running trucks over Lake Ladoga. Ukraine has a completely undisrupted western border with Poland. There's a couple of cruise missile strikes and standoff missile strikes, sure, but for the most part, the railways are intact, the roads are intact, there's infrastructure there to move at least some goods in and out, and those can be expanded over time. So that's the current status quo. Russia is managing to hold its economy together, sort of, but it's experiencing pain and having to exert itself in order to do so. The West really has only just started to mobilize. It's still the economic behemoth of the world, a combined economy of between $40 and $50 trillion, depending on which nations you include in the definition, massively outpowers the resources that Russia can bring to bear. But the West needs to bring those to bear if Ukraine is going to hold it together, because Ukraine's economic condition is really, really tough. So let's take that all together and look at the longer term. What happens if this war does indeed go long? What happens whether Russia achieves its immediate military objectives or not? What's the takeaway from looking at how those states can apply their economic strengths in order to affect the outcome of the conflict in the longer term, in a matter of months, but more importantly, a matter of years as opposed to days and weeks? And the first thing to talk about is hydrocarbons, Russian oil, gas exports, primarily to Europe, because this is the hedge. This is the point. This is the thing that everyone who talks about Russian power over Europe talks about. It's the dependence of European states on Russian energy exports. And I agree that it is perhaps Russia's most effective tool at containing European support, particularly support from nations like Germany and Italy and the Netherlands, who are highly dependent on oil and gas. But it's important not to overstate this point. I saw a recent interview with Sergei Guriev, who's the former head of the European Bank of Reconstruction and Development, and his colleagues were running the numbers and saying that an immediate embargo on Russian gas into Germany would probably do about 1 to 1.5% of GDP in terms of an immediate retraction of 1 to 1.5% of GDP. That's bad. It's not catastrophic. It's not beyond the ability of European nations to bear. There's a lot of ways that Europe can deal with it in extremis. If Russia turns off the taps or they turn off the taps on Russia, it would hurt. It would mean energy rationing. It would mean paying a higher price in order to get imports off the market at short notice. It would mean doing everything you can in order to reduce or substitute certain energy expenditures. But that dependency goes both ways. I've included a graphic there which shows Russian exports by category. And you can see the dependence on the brown there, the petroleum oil, the gases. Russia's strength relies on these hydrocarbon exports, and you can't just suddenly redirect a lot of these. Gas goes through pipelines or through LNG terminals. You can't just change its direction suddenly. So Russia can't just suddenly point all the gas that goes to Europe to China if Europe decides to get tough. It's going to be hard to redirect oil. It's been able to redirect oil away from some markets, but the problem is when you're partially embargoed, everyone else knows this, and suddenly they're not willing to pay quite as much because they know they've got you over a barrel, ha-ha. India is paying a significant discount for Russian oil at the moment, and that's likely to continue to be the case. Russia cannot readily shift its hydrocarbon exports elsewhere, so it's just as tied to Europe. In fact, it's more tied to Europe than Europe is to it. And now it's on the clock. Europe is embarking really on what is admittedly a very costly move away from Russian energy. It's a question of very difficult recapitalization on its side, but also of the Russian export sector. So Europe is moving back its emissions reductions targets. It was going to be 55% by 2035. It's now 55% by 2030. They're also talking about building new LNG import terminals. They're talking about sourcing extra gas from places like Qatar. The bottom line here is Russia cannot count on Europe as an energy export market the way it could before. Germany might not be willing to turn the taps on now, but it's well aware of the fact that it's being blackmailed and it's making every effort in order to move its economy away from Russian hydrocarbons. The Germany is talking about ending Russian oil imports this year. They're talking about reducing gas usage by between a third and 2/3 over a relatively short period. So over time, the longer this war goes, Europe will gain increased strategic autonomy, more ability to stand up to Russia because it's less dependent on Russia suddenly shutting off energy supplies. The loss will be less if that suddenly happens. At the same time, Russia's export earnings are going to be hurt, and they're going to have to invest in new infrastructure to move their exports elsewhere. And right now, there's a question over how effectively Russia can capitalize. Where can they borrow from in order to build these bloody pipelines or new export terminals? Can they endure the discounts on their oil, for example? And you know what? I also think it's worth noting that Russian exports aren't just oil and gas. That's very important for the government bottom line. It's not the be-all and end-all. Travel and tourism is a good example. The Russian aviation sector's been absolutely poleaxed. They can't get spare parts for their foreign aircraft, which means those foreign aircraft can't fly. Their aircraft can't fly over the airspace of Europe or America or a whole bunch of other countries, so their ability to actually support that industry is gone. The largest single country for sending tourists into Russia was Ukraine. I'm pretty sure that's not going to be the case anymore, just a guess on my part. So there's a lot of other industries here which are really important. Wheat exports, travel and tourism, a lot of the manufacturing sector, they're part of the European value chains, and all of these are under threats. And even the Holy Grail, the hydrocarbons themselves, are under long-term threat. And now let's talk about the gas fields. I need to talk about this, because remember, the theory at the start is Russia is just going to seize the gas fields and the resources of the Donbass. They're going to exploit them, and this was their goal all along. It's an economic war. It's a war that's going to make Russia richer and stronger in the long term. Frankly, I have questions. Firstly, resources are in the ground. You need to dig them up, and that's bloody expensive. Take it from someone who's from a country called Australia, which also depends for its economic prosperity on the art of digging stuff up from underground and selling it overseas. It's an expensive activity. You need export partners. So let's just say you access gas fields in the Donbass. Who are you going to bloody sell it to? You're going to build a pipeline to China? You're going to build LNG export terminals? Over what time scale are you going to do this? It's going to take you years to develop this infrastructure. Where are you going to borrow the money from in order to fund this infrastructure? And finally, on a bit of a cheeky but pragmatic note, gas is a very valuable commodity. It's valuable in part because it has these interesting chemical properties, like the fact it's very volatile and stores a lot of energy. So you apply some heat to it, and it burns or explodes. That's what makes gas good. So what you're saying in this scenario is you're going to build a bunch of gas extraction wells, pipelines, and LNG terminals in territory that Ukraine still considers its own. So you're going to build a whole bunch of gas pipelines in an area potentially infested with Ukrainian partisans, in range of Ukrainian artillery, facing a country which has drones, a nation which will have rocket-boosted artillery rounds, a nation which has tactical ballistic missiles, and an axe to grind. This sounds like a bloody stupid idea, frankly. I don't understand how people expect, short of Ukraine surrendering and accepting the Russian presence, which I assume had to be the assumption of the Russian war plan, that Ukraine would fold and it would become a vassal or a controlled state. I don't know how Russia proposes to convert the hydrocarbon resources and other valuable materials that it's supposedly capturing here into a net economic gain that outweighs the tremendous economic costs associated with this conflict. $1 trillion worth of resources in the ground does not equal $1 trillion in your pocket when you take it. You've got to extract it, you've got to export it, and you've got to do it efficiently. And at every step of the way, from borrowing the money, from sourcing the technology to extract it, which Russia depends heavily on the West for, to providing security for it and maintaining it, I just don't see the economic case. And by the time Russia is maybe solved some of these problems, you're dealing with a context in which a lot of the world is decarbonizing and converting away from these sort of assets, and at the same time that American gas and hydrocarbon production has probably further increased. Like, it's not a good future for the hydrocarbon economy if you're only starting to develop now and you're proposing to develop it in an area that's going to be subject to attacks. So there you are. That's my analysis on why I'm not really sure that this gas well in the Donbass is the master plan argument makes sense. Not from an economic perspective, because the value of what they are taking cannot be practically realized to an extent that it makes this offensive worth it. The numbers just don't add up. Then there's the question of import substitution. So how does the Russian economy deal with the fact that it can no longer import technology or resources from the West, especially over the longer term? The first thing I'll say here is that we need to respect Russia's inventiveness and capabilities. Before 2014, their defense sector was extremely heavily dependent on foreign imports, particularly from the West. They have spent 8 years trying to resolve that problem, but they still have a dependency on foreign parts interleaved throughout their defense sector, throughout their manufacturing sector. Now, some decoupling will happen over time. they'll be able to substitute with components that they're able to produce domestically or that they're able to bring in from China. But international supply chains are really complex. Even China, even the United States would really struggle if they would suddenly cut off. And redesigning, retooling to use new components or to produce new components from scratch is an expensive exercise. You need new machine tooling, you need to go through redesign, and often what you're bringing in, say semiconductors, for example, the semiconductors you're bringing in from China will not be a one-for-one replacement in some areas and some applications with the ones that you were previously bringing in from like Taiwan. They're just not going to be able to do the same job one-to-one in terms of cost and performance. So it's a slow, expensive, and imperfect process. And what the Russian economy now faces, what the Russian manufacturing sector for cars, trucks, aircraft, tanks, missiles, everything now faces, is trying to do this decoupling and adaptation process, this move towards autarky, self-reliance, in a situation where they're rapidly running down their forex reserves, when imports are difficult, when it's hard for them to borrow money, which they're going to need to do in order to recapitalize these industries. A lot of Russian defense businesses are already very highly debt-ridden, and I'll talk about that when we talk about the defense sectors next episode. It's going to be difficult. It's going to be really difficult for Russia to rekey its manufacturing and other sectors to only use the goods, physical, and software that they can get access to. And then there's the human capital problem. Maybe I'm biased, but I put a lot of stock in human capital and the value of immigrants to a country. Australia is really built on them. America is really built on them. And there's a reason for that. The idea is a lot of the cost involved in raising a human being is incurred early in their life. Educating them is a cost. Raising them is a cost. Years during which a child or a young adult is not really doing anything productive. If you're able to then get skilled immigrants, what you've essentially done is you've outsourced the cost of their education they're raising somewhere else, and then you just get the productive years. Like when America brings in qualified engineers or skilled people from overseas who've been educated in India or Africa or Asia or Europe or anywhere really, what America is doing is basically hijacking that individual's economic potential and not paying the cost of raising them in the first place. Russia is now in the reverse situation. Human capital is critical to the Russian economy. It's one of their advantages. It's why they should be a stronger power than they are, because they inherited a lot of expertise from the Soviet era, and they continue to have an education system which is capable of putting out really talented and capable people. But there's also a lot of reason for those people to leave. As repressions increase, as economic conditions deteriorate, and as markets in the West and elsewhere continue to be more attractive, you're going to see human capital flight. And that self-selecting nature of immigration, that it's particularly the people with the most transferable and most valuable skills who are most likely to be accepted by other countries and thus the most likely to leave, can be really punishing. If Russia is left with its pensioners, its unskilled workers, its unemployed, and loses its skilled, young, talented workers who are more internationally mobile, then that's a long-term threat to the Russian economy. Balancing all of this, of course, are the challenges that Ukraine is facing. Key challenge for Ukraine, well, there's two key challenges. The first is how willing is the West to continue ramping up support? I think we have reasons to believe that the West will continue ramping it up. I'll talk about that more next episode. But again, the focus of this episode is more on the capacity of the West to support as opposed to the will. So far as the logistics challenges go, in the long run, more is possible. It does depend on how the military situation develops, and it depends on the political will of all involved. But ultimately, the Ukrainian logistics system can be improved with time. They already have a very capable rail transportation system. I think it's like the 6th largest in the world in terms of total freight moved. So there is potential there, particularly if you're able to supply them more rolling stock and financial support. If Odessa can be opened, so if the Russian Navy can be pushed off, so you have more incidents like the one that just happened with the Moskva at the time of recording, and the Black Sea Fleet gets pushed out and you're able to start moving civilian traffic through Odessa, that will help. But there's road, rail, air links that you can leverage as well. Russia, meanwhile, can, for its part, ramp up its interdiction efforts. They can use more long-range ordnance to try and interdict these supplies. They can keep a really tight hold on shipments into Odessa. They can try and launch more long-range strikes. They might even launch a new offensive that's aimed at cutting off Ukraine in the west from Poland. That would be an interesting military gambit. But all else being equal, if not much changes, Ukraine is fortunate enough that the scale of its freight and logistics capabilities may not be sufficient to get everything that they need, but there's a basis there to supply them with what they can use, at least to a limited extent. These will be tested to the absolute extreme, but they're there. The capabilities are at least there. For example, Ukraine is shipping out some of its grain exports, nowhere near what it would normally put through Odessa, but it is pushing some grain exports through the rail network back into Europe. But I'm sorry, I need to come back to Russia for a moment. Because this point bears thinking about. It's the issue of sovereign risk. We opened by talking about a number of the strategies that Russia is using to hold up the economy. And some of those included sweeping government interventions in the economy and de facto expropriations. So, for example, preventing foreign holders of securities from holding them while they watch the value disintegrate, threatening to seize the assets of Western companies that pull out, breaches of the right to property, essentially. These are all sovereign risks, directly because of government intervention, or also indirectly because who knows when Russia's going to start another war and your investments in Russia will suddenly be worth nothing or at least be significantly devalued. Because of this, there's going to be a great nervousness on the part of financiers, investors, Western businesses to go as heavily into Russia in the future as they might have. In fact, they might not touch it with a 10-foot pole. They might decide there are other markets out there that are more worth investing in, that are safer to invest in than the Russian economy. And that's a problem because eventually the Russian economy is going to need to recapitalize. Economics are bores of free lunch. And what Russia is essentially doing is they're going to find out that you get one go at theft, where you basically get to lure everyone in and then seize all their assets or contain their ability to sell them. You get to do that once, but it's very hard to convince people to come in and do it again. And if countries aren't willing to invest, if they aren't willing to go back into Russia, it's going to be hard for them to recapitalize and overhaul their industrial sector. It's going to be hard for them to get their economy started again. The debt-driven model of growth is one that China has proven you can make work. It can be problematic if it overheats, but eventually Russia's going to want to stimulate the economy if it doesn't want a massive decline in the living standards of its population and eventually a degradation of its military and industrial base. And after what they've done here, I'm not sure that you're going to have Western financiers or any international financiers racing to go back into the country. This is, to not put too fine a point on it, a wound that is not going to hurt now. In fact, it's filling the Russian economy with a bit of a sugar hit because they are able to take advantage of the fact that Westerners put money into the stock market that they can't get out. If they seize assets, they'll get those assets for less than they're worth, which is a bonus. But they're not going to be able to do it again. And the problem there is that's just going to be a gaping wound that bleeds in the long term to further weaken the Russian economy. So what next? That's the long-term picture as it stands. The Russian economy has what it needs to hold together in the near term, but there's a lot of reasons to suggest that its major strengths, from hydrocarbon exports to its human capital to the productivity of its industrial sector, are all under threat in the long run, whereas the West has the capacity to absorb those weaknesses. What happens next? What can Russia do? Well, Russia can probably continue to embrace market distortions. Price and capital controls are probably going to have to operate in close nick. They're probably going to impose some sort of restrictions on buying or selling critical goods where they haven't already. There might be price controls in order to get inflation under control without fundamentally solving the problem. Over time, however, that would translate to things like shortages. People aren't willing to produce if you're not willing to let them sell it at a price that it's worth. They're likely to continue to impose stealthy taxes and appropriations on the Russian people. That's through doing things like containing the Russian people's ability to get out of the ruble, or forcing companies to purchase it. More of the same that they've essentially done. Outsourcing the cost of the war as much as possible outside the bounds of the Russian government itself. Hydrocarbons will keep them going, at least for a while. And there's the option of them, of course, they can tap the money printer. Money printer can go brr. They could print more rubles in order to pay their defense contractors and get the economy running. The problem is inflation's already running at a record high. And every time you tap that money printer, inflation goes just that little bit higher. Like I said, the economy abhors a free lunch. And when you run that money printer, you devalue all the cash that's out there, which is exactly contrary to what they're trying to do, buying up rubles to hold the price up in the first place. They can, of course, accept a wider change in the standard of living. You can go the way of North Korea. It's not that Russia doesn't have enough economic resources to maintain and push a large military. It's that they don't have the resources to do so while still delivering a good or increasing standard of living for the population. If you're willing to impose high taxes, if you're willing to accept a decline in the number of imported goods that people have access to, if they have to make do with just the absolute basics, and in exchange the government husbands the resources it needs in order to maintain the war economy, that's a choice a government can make. It's a choice that governments like North Korea have made. on a far more extreme level. The question is the Russian government willing to do it? If it's not willing to declare general mobilization, is it willing to basically destroy the living standards of ordinary Russians in order to maintain the war economy for 1, 2, 3, 4 years until the Ukrainians finally come to the table? They will, of course, restrict movement. They'll restrict information. Restricting movement is potentially a valuable way of stopping human capital flight. This is what the old Eastern Bloc powers used to do. The Berlin Wall was about that, right? It was about stopping individuals moving from east to west. So they may restrict the movement of Russians. They may restrict the dissemination of information so that it isn't as immediately obvious how much economic damage. Another thing they can do, I won't dwell on it, but you could become a Chinese vassal state. So you can start asking China for financial bailouts, import substitution. You could become highly economically dependent on China to compensate for the fact that you can no longer access most of the world economy in the form of the EU, the US, and their allied powers. But that's going to give China greater and greater control over Russia and reduce its international autonomy. The proud Ruski Mir will not be the Ruski Mir, it will be a client state of China if they decide to go down that route. So, in short, they have lots of options. They're not particularly fun options. They're not particularly rewarding options. They're painful. But there are options that will stop them collapsing in any near scenario. It's only in the very long term that Russia starts to pay huge economic prices. But make no mistake, there will be lasting wounds, in particular from the destruction of the trust of the Russian market and the difficulties they will consequently have in attracting future investment and recapitalization. What can the West do, by contrast? I'll split this into two bits. The first thing is about how you support Ukraine. I think the first thing you do is you establish market confidence. So you make clear none of this one package announced every week stuff. Incrementalism is an invitation, an idea. It promotes the idea to Russia that maybe this 800 million or maybe this 1.6 billion is the last. I would sweep it forward. I would go further. I would say, yes, I am underwriting all Ukrainian government expenditures relating to the war. I'd vote up a huge international support package, a fund, basically. Hundreds of billions of dollars, not a couple of billion, hundreds of billions of dollars, not allocated to specific things, but a fund that is voted through the parliaments and the congresses of the various powers that can then be drawn down to pay for things as the Ukrainians need them. I also think the West needs to start planning for long-term challenges now. How are they going to ship all these goods? How are they going to maintain the Ukrainian government if this conflict continues? I think militarily there's a question of how you get Odessa open. That probably means lots of long-range anti-ship missiles and other assets to push the Russian Black Sea Fleet further away so it can't effectively blockade that port. I also think the West probably needs to hold its nerve on secondary sanctions. Eventually, some power, it might be China, it might be another power, is going to test the will of these countries. It's going to do something that breaks sanctions. It's going to interact with Russia in a way that the sanctions do not allow. And the West basically needs to hold its nerve and impose secondary sanctions no matter the cost there, just to prevent the sanctions regime breaking down over time. The West also needs to set the hydrocarbon clock ticking. No, Europe can't become independent of Russian gas tomorrow. But it needs to start the process of doing so. Even if that takes a year or 2 or 3, it needs to dial up that pressure so Russia knows it's on the clock. And the final thing I'll say here is the West needs to recognize its own strength. It's always funny watching countries like Germany act really afraid of Russia, frankly, when economically Germany's got about as much heft as the Russians do. Sure, Germany's dependent on Russian gas, but Russia is dependent on gas sales to Germany too. The West seldom acts like it is the $40 trillion gorilla that it is. It needs to acknowledge that it has muscle. It needs to be willing to use that economic muscle. And I suppose importantly, it needs to prove that it's willing to take a hit. The West needs to be willing to take a slap to the face in order to deliver a knee to the groin, basically, if they're going to make this regime actually work and save Ukrainian lives. So those are just some options. None of this, to be fair, works quickly. This, as I said, doesn't knock Russia out of the fight particularly quickly. So in the short term, the key is keeping Ukraine confident in the fight. Support for Ukraine is as or more important than inflicting pain on Russia in the near term. That means finances and that means weapons, which we'll talk about next time. For Russia, by contrast, it means finishing the fight in time and forcing the Ukrainians to a peace deal is critical. That means not just winning military victories on the battlefield, it means then convincing the West to pressure Ukraine to accept a peace deal and pressuring the Ukrainians to accept one. Because the way Russia avoids this economic Armageddon is it finishes the war and normalizes relations. That's why the military dimension of this remains so important. That's why we need to talk about weapons next presentation. But if the will is there, if Ukraine is willing to stick this out, if the West is willing to stick this out, then I'm sorry, this is an economic overmatch. This is not even close. The economic resources of the two sides are completely, hopelessly, and hilariously disparate. And even if this ends tomorrow, even if Russia did achieve its goals tomorrow, the deep wounds inflicted by capital controls, the threats to seize foreign assets, the controls on the sale of equities, all of those are going to be long wounds on the Russian economy that prevent it engaging effectively with the Western economies in the future. My final note here, before I move on, is that I sincerely hope, and I hope we all hope, that after this is over, the West will not just walk away from Ukraine. The West needs to have a Marshall Plan for Ukraine. There needs to be a plan to rebuild Ukraine. And that's a strategic imperative, not just a humanitarian imperative. Because if countries see that the West will support them during a fight, and then it will support them in the peace thereafter, then you will bake in, you will secure the 40 plus million people of Ukraine as Western allies for a century. You will do to them what the Marshall Plan did to Germany and did to Japan, which was turn them into productive members of the Western economic order and loyal American and Western allies. If you abandon Ukraine, then you are going to invite a broke and damaged and destroyed country to seethe with revanchism, hate, and extremism, and you're going to end up with a security issue on Europe's doorstep. So a commitment and a thought needs to be given to the fact that after this is done, Ukraine needs to be rebuilt and brought into the wider European order. It's a strategic goal, not just a humanitarian one. I'd also stress that isolation does not necessarily mean an end for Putin. I've talked about how in the long run the Russian economy is under very severe threat. That doesn't necessarily mean that Putin is under threat. Nations are entirely capable of limping on without global economic connectivity or investment. Kim Jong-un is still the leader of North Korea, despite the fact that that nation's economy is not capable of feeding its people, which you'd think is like the basic level. It's capable of building nuclear weapons. It's not capable of staving off starvation, and yet the regime remains intact. Productivity will stagnate or decline. Human capital will flee. Russia will become a poorer, sadder place in economic terms. But ultimately, the regime can survive if it's willing to be repressive and use the resources available to it to perpetuate itself. The key that can change is that you can't reconstitute a military that way. Rebuilding and modernizing the Russian army so that it can either sustain the war in Ukraine or so it can threaten the Baltics, so it can threaten Finland, so that it can threaten its neighbors, that costs funds one way or another. And sustaining the economic pressure on Russia is going to remove or reduce its ability to find those funds and produce the armed force capable of becoming a threat again. The political outcomes in the country are a different topic, but the economic outcomes certainly weigh in favor of a reduced military capacity going forward. At the end of the day, you can't produce a functional first-rate military when you're running on fumes in terms of financial resources. There will be, of course, consequences to countries that aren't Russia and Ukraine. And I thought I'd close on this. Russia and Ukraine are major grain exporting countries. That's probably not a problem, and now their exports are being disrupted, severely disrupted. That's probably not a problem for Western countries, frankly. Western countries have effectively nearly unlimited fiscal resources. They've got cash. And because you have cash, you're able to buy food imports as necessary. Some nations like the United States probably don't even need to import food. They're net food producers. Australia is a net food producer and exporter. Some countries in Europe have significant agricultural production, but they import the rest. They have the money. The people who are going to lose out from this are the often neutral, third party, and often poorer nations that import very large amounts of this grain. Egypt comes to mind, countries in Africa come to mind. NATO and NATO partners are probably going to be okay. We need to acknowledge that the humanitarian crisis that is focused on Ukraine at the moment will extend if these exports are disrupted for a significant period of time, which they will be in the event of a long war that continues to rage back and forth on Ukrainian territory. So here are some closing thoughts. And here I put the asterisk, closing thoughts, not analysis. I'm moving away from the data and evidence and just giving you my thoughts in sum up. So there's a disclaimer there. As a student of history, there's sort of a theme in history when you look at the way that autocrats rise to challenge the Western order. One of the great accusations, I suppose, they make and assumptions they make is that of decadence. The idea is that the West is not ready for a fight. The West isn't willing to take a hit. Hitler assumed that the West wouldn't stand up to him. He was surprised when the West declared war, when he invaded Poland. He was surprised. He was caught off guard. And to an extent, there's a reason that assumption is made. Western nations do tend to be relatively timid. They have their own problems. They focus inwards. They're prone to bouts of strategic lethargy. They occasionally suffer from really poor, for lack of a better term, self-confidence. But the fact is, now, as much as then, is that there is no equality in the global economic order. The Western alliance, the combination of the United States and the NATO countries, to an extent the EU and the near-NATO powers, are hilariously overpowering. They are the centers of gravity for the global economy, equaled only really by the center of gravity in China. And when that economic power is roused to action, historically or now, the material capability of those states is absolutely overwhelming. So the Western Ukraine has decided it doesn't want a kinetic confrontation with Russia. It doesn't want World War III. That's okay. But the West has to make the active decision. If it wants to win, it has to make the active decision to leverage the financial and economic resources it has available to it to win this conflict. Not just to keep Ukraine on life support, not just to inch its way towards a peace deal, but to demonstrate that it is capable and willing to respond to aggression which challenges the global order by using its muscle in order to counter that threat and lead to a disastrous defeat for the ones who challenge it. So if there's a willingness to embrace that discomfort, if, as I said, there's a willingness to take a slap to the face in order to deliver a knee to the groin, then there is every reason for Moscow to fear the long war. The West's vulnerability in all of this is its will. Will it fracture? Will it refuse to support Ukraine enough? Will it not turn on the support tap? Will it not be willing to take the costs associated with weaning itself off Russian energy? These are all open questions. They're not questions that I, as an analyst sitting here, can answer. All I'm telling you is if I was in Moscow right now, I would be sweating bullets. Because if Zelensky decides to make this a long fight, it doesn't matter how many gas wells in the Donbass I capture. If the West is willing to back him to an extent of even mild discomfort, then I'm sorry, but you're stuffed. All right, so let's close out on a channel update. Woohoo! This time there is no misspelling, so sorry, no Chanel update this time. Very, very sorry. My first question in this update is, what on earth is happening with this bloody channel? Like, a reminder, guys, I do PowerPoint presentations on defense economics mostly, and that's my sub count. I don't know what's happening. The next update is I did put up an email last time, an email that allowed people to submit information that they wanted me to consider because it either contradicted something I was saying or supported it or because it was relevant to the war in some way. Not surprisingly, I have received a lot of emails from people, from Ukrainians, from Russians, from people with political opinions, from people with no political opinions. I've received offers of help from people who want to support the work, who want to do data analysis, graphics, and whatnot. I've received a whole bunch of hilarious propaganda, which is great. At some point, I should do a highlight reel of the most outrageous propaganda I have received in that email address. And of course, I've received a lot of questions. In order to do justice to all the people who spend the time to engage with me, I am going to be pretty slow on releases. 1 a week or 1.5 per week seems more reasonable, and that's going to be to allow me to do a whole bunch of housekeeping. I need to improve my sound quality. I need to overhaul the icons I use on my channel because I'm sorry, my old gaming hoplite's not going to cut it when my name is Perun. I've got to overhaul my Patreon, which was ultimately designed for when it was gaming as opposed to gaming and this sort of analysis. I need to reply to all that email. So I need to adjust the way I do tier rewards in Patreon and all sorts of stuff like that. And I need to spin off a gaming channel so that I can start putting gaming content up without spamming people who subscribe to this channel with that content when it's released. So with all of that happening, expect me to be a little bit slow on releases in order to accommodate that. I will close out with a thank you, as always, for the immense amount of support that I have received over the last days and weeks. It has truly been incredible. I hope the sound quality is at least a mild improvement this time. This is a new microphone in a new space. I'm still working on how to get rid of the echo and improve that quality further, but I'm hoping it's done more for you. Thank you as always for your questions, your comments, your engagements, and your kind support. I really appreciate all of it, and I'll see you again soon. Cheers.